Hi, this is Current Affairs, admin of Current Affairs page, Facebook page, www.facebook.com/taste current affairs. Your favorite happy page where you get lots of informations in one platform. Well, Current Affairs is not my name, of course. My name is Sansar Lochan, but you can call me CA, that you usually call me, or whatever you want to call me, I don't mind. I had promised you all that I would make you understand the concept of repo rate, reverse repo rate, CRR, SLR, whatever. Well, I will talk to you in a simple English. Can't talk in Hindi because there are so many students here who are from South and non-Hindi belt. They understand Hindi, but a little bit. So I will talk in a simple English. And these days, English, fortunately or unfortunately, has become compulsory language because you will have to face it every time, whether in examination, GD, interview. So you should practice it. Last day, I had asked you a question like, what would RBI do if there is a recession in the economy, and if RBI wants money flow in the market, what it will do? Something like this. I don't remember. I will not tell you a deep concept today. Actually, you will get confused if I will talk about ins and outs of every concept. I will tell you a simple thing to explain all concepts of the financial activity between the RBI and the commercial banks. As you know, RBI is banker's bank. It takes all decisions of government financial activities. RBI governor takes all decisions like when to make money flow in the market, when to rise or lower the bank rate, repo rate, reverse repo rate, etc. But have you ever thought why RBI does these kinds of activities? Uh, just assume you are RBI. Well, it's a weird thinking. How can you be an organization? But just think, assume you are RBI and you are the head of the family, like your parents are, and your offsprings, or you have 3 or 4 daughters and sons, and they are commercial banks. Now, as you are the head of the family, you have to manage expenditure of your whole family, and also you must be in your budget. You can't afford to give your sons or daughters too much money that will make you out of the budget, okay? But you are a strict mother or father. You take interest from your son or daughters. It's not usual in family, but just you have to assume to understand this concept. So now what I was saying, yes, you have to take interest from your sons or daughters. If you give them 100 rupees in a month, then you charge 2% interest. That is of course 2 rupees in a month. That they will give you 102 rupees when month got finished. Anyways, suppose if you want your offspring to spend less, then what you will do? You will of course give them money, but you will increase interest rate. You suppose you increased 2 to 5%. Uh, suppose 2 to 5%. Then they will have to give you 105 rupees in the month's end. Yeah, it's a good way to control their expenditures. So, repo rate is just an interest rate which commercial banks give to RBI. RBI lends money to commercial banks when any kind of shortage of money commercial banks are feeling. But when RBI increases repo rate, it means RBI increases interest rate to control the money flow of the commercial bank. I am using money flow term here because it is not a family matter now, it is a financial matter. And by this act of RBI, money flows in the market decreases because commercial banks also increases rate of loans that they lend to us, means customers. Uh, then people will be least interested to take loans, and money flow in the market will decrease. Now, here you will have to you will have to understand two important things more. First, when Aam Janta, means people like us, have less money, then we will spend less, and demand will go down, and so inflation decreases. Inflation is just महंगाई, nothing else. Second, when आम जनता has enough money in their hands, they spend more, and that's why demand increases. So inflation also increases. महंगाई बढ़ जाती है. So two concepts are very important for you, because whatever RBI does is just to influence inflation, or you can say demand of aam janta, whether it increases or decreases repo rate, reverse repo rate, CRR, whatever. It is just about to control demand in the market. If demand is high, that means people have much money in their hands. They will demand more, so the inflation increases. And if demand is low, means people have less money and in their hands, and they will demand less, so inflation decreases, nothing else. So now you have to fit one thing in your mind: every act of RBI is just to shrink or expand the money flow to commercial bank through commercial bank to control the inflation, or you can say just to control the demand of people, or you can say to control the money flow in the whatever you use the term. This is the same thing. Control the inflation, or you can just say to control the demand of people, or you can just say the money flow in the market control. So when RBI decreases repo rate, or you can say decreases interest rate, then commercial banks feel relief, because they will have to pay less to RBI for their loans, and also they will offer less interest to their customers like us. So it is clear that RBI wants commercial banks to have more money with them. Means RBI is right now liberal to the commercial banks, and so commercial banks will give loan money in the low rate of interest to us, to Aam Janta or people. And Aam Janta will demand goods. They will buy many things: fridge, TV, mobiles, laptops, whatever. And inflation will increase. And if RBI increases repo rate, then what will happen? Then commercial banks will have less money. They will not afford to give people loan, money, etc. So demand in the market will lessen. So inflation will be what? Less or high? Say no. Inflation will go down. So you don't have to mess up yourself trying to know why RBI does so, because it's none of your matter. You have to just clear this concept for the exam, because many questions are asked related to this concept. Well, now it would be easy to understand other concepts also. Now we have learned many things, basic concept, and it's very easy to understand other concepts also. Like say reverse repo rate. Sometimes RBI borrows money from the commercial banks. RBI borrows money from the commercial banks and also gives interest rate for that. Banks are always happy to lend money to the RBI, since their money are in safe hands with good interest. When RBI increases this rate, means increases reverse repo rate, then commercial banks feel happy here, because they will earn profit against the deposit that they have with the RBI. So they will enjoy higher interest rate in their money. और उनकी जो मनी है सेफ हैंड में है आरबीआई के पास, और वो ज्यादा कमा रहे हैं, जस्ट इंटरेस्ट रेट अधिक उन्हें मिल रहा है. दे विल एंजॉय हायर इंटरेस्ट रेट. सो द रिजल्ट इज बैंक्स हैव लेस मनी अगेंस्ट टू गिव इट्स कस्टमर. सारे पैसा उन्होंने आरबीआई के पास रख दिया, क्योंकि वहां उन्हें ज्यादा इंटरेस्ट रेट मिल रहा था, इसलिए उनके पास कम रह गया किन्हीं देने को, कस्टमर को देने के लिए. बैंक्स हैव लेस मनी अगेन टू गिव इट्स कस्टमर. And as I told you earlier, demand will be less, so inflation will be also less, and vice versa. And if you see this whole thing in commercial banks interest rate of point of view, whenever commercial banks have less fund with themselves, they charge us higher interest rate. So customer likes us don't take loans, and money in the market goes down, and then demand goes down, and then inflation goes down. One thing more to add here: reverse repo rate is always 1% less than repo rate. It is a favorite question of many examinations, so always remember it. Now, we will talk about cash reserve ratio. We call it CRR. CRR is nothing but a specified minimum fraction of the total deposits of customers, which commercial banks have to hold as reserves with the central bank. Suppose CRR is 5%. Suppose CRR is 5%. Then it means if bank has 100 rupees credit limit, then 5% of 100 rupees, that is 5 rupees, they should give to RBI to keep with it without any interest rate. It's a bit technical definition, I know. Just understand. Commercial bank have to give some specific amount of money to RBI to keep it. And if RBI increases CRR, that means bank will have to keep more money with RBI. So commercial banks have less money to give it to customers. Then money flow goes down in the market, so demand of the customers become low, and then again inflation goes down and vice versa. Also, CRR affects interest rate of banks. When CRR is high, bank have less money, then bank interest rate for his customer will be high. कस्टमर बैंक का जो इंटरेस्ट है कस्टमर के लिए वो भी हाई हो जाएगा, और कॉमन पीपल विल टेक नो इंटरेस्ट टू टेक लोन्स फ्रॉम द बैंक, and again the same situation, demand low, inflation go down, something like this. The RBI uses all kinds of these tools, repo rate, bank rate, reverse repo rate, CRR, whatever, to drain out excessive money from the system or release money to the system. Okay, got it. Now we move to bank rate. What is the bank rate? Repo rate and bank rate are both quite similar. Both are interest rate taken by RBI from commercial bank against the loan which commercial banks borrow from RBI. But repo rate is the interest charged by RBI for the short term loan. शॉर्ट टर्म लोन यदि लेना है कमर्शियल बैंक को, तब रेपो रेट के हिसाब से आरबीआई चार्ज करती है. यदि लॉन्ग टर्म में जैसे 10 साल 20 साल 20 years 40 years whatever, तो वो बैंक दोनों एक ही चीज है, बट कॉन्सेप्ट लॉन्ग टर्म और शॉर्ट टर्म का अंतर है. सो वेयर एज बैंक रेट इज द इंटरेस्ट रेट levied by RBI for long-term borrowing by the commercial banks. Okay. Now time to know about SLR, statutory liquidity ratio. Statutory liquidity ratio refers to the amount that the commercial banks require to maintain in the form of gold or government-approved securities before providing credit to the customers. SLR is just the minimum percentage of deposits that the bank has to maintain in the form of gold or other approved securities, or you can say whatever. It is the amount of liquid assets such as precious metals, golds, or other approved securities that a financial institution must maintain as reserves rather than the cash. Actually, RBI fixes SLR to control the commercial banks to give customers loans out of its capacity. So RBI wants कि banks लोगों को ज़्यादा लोन नहीं दे, means banks don't give too much loan out of its capacity. So RBI fixes a specific amount of SLR. SLR is not any interest rate. Just always remember it. SLR is not any interest rate or any kind of rate. It is just a ratio of liquidity that is in the form of gold, shares, etc. that commercial banks are bound to keep it with them. And one more thing, SLR is minimum 23%. एग्जामिनेशन में आ सकता है कि SLR की मिनिमम क्या है, रेट क्या है और मैक्सिमम रेट क्या है. तो सो आई टेल यू, SLR is minimum 23% and maximum 40%. Suppose you have 100 rupees. Okay, suppose you have 100 rupees and I want to take 41 rupees from you as loan. then you won't be able to give me this amount, because RBI has instructed you not to give money to anyone beyond 40%, that is 40 rupees, because you have to keep 60 rupees at least with you all the time, and giving me 41 rupees, you are left with only 59 rupees. But if I will take 39 rupees from you as loan, then you will have 61 rupees left with you, so you will be able to give me loan. On the other hand, minimum SLR limit is 23%. At least you have to maintain 23 rupees with you. If you have 100 rupees capacity, means you can't afford to keep less than 23 rupees. You will have to maintain SLR 23 rupees or more than that, because RBI will take penalty from you 3% per annum above the bank rate. So if any Indian bank fails to maintain the required level of statutory liquidity ratio SLR, then it becomes liable to pay penalty to RBI. Yeah. Again, if RBI increases SLR, take your example, you had 100 rupees, right? If RBI frees SLR, suppose 40%, then you will lend money to your customers 60 rupees. And if RBI decreases SLR, suppose 38%, then you will be able to give loan 62 rupees, more than earlier. That means money flow will increase in the market, demand will up, inflation will rise, and vice versa. So in the conclusion, we sum up. You can note down. First, if repo rate increases, then less money in the market, less demand, inflation goes down. Second, if repo rate decreases, then more money in the market, more demand, inflation goes up. Third, if bank rate increases or decreases, same effect as repo rate, because I told you repo rate and bank rate are same, but repo rate is for short term loan and bank rate is for long term loan. And the fourth point, if reverse repo rate increases, then less money in the market, less demand, inflation goes down. Fifth, if reverse repo rate decreases, more money in the market, more demand, inflation goes up. If CRR increases, 6 point, if CRR increases, less money in the market, less demand, inflation goes down. Seventh, if CRR decreases, more money in the market, more demand, inflation goes up. 8th point, if SRR increases, less money in the market. Here's the change. If SRR increases, less money in the market, less demand, inflation goes down. And the 9th, if SLR decreases, more money in the market, more demand, inflation goes up. I think it's enough for today. I tried my best to make you understand. Maybe somewhere you feel bored or got stuck somewhere. Listen to this clip again and again. Pen down important things. Maybe concept will be clear. I am available on Facebook. My ID is www.facebook.com/worldly.eyes. WORLDLY.eyes. I am also on Twitter. There you can get daily news, daily updates. www.twitter.com/Sansarlochan. SANSARLOCHAN. And our current affairs page, you know well, it has touched over 1.25 lakh reach. That's excellent. Thank you for your support. Keep in touch with us, and if you wanna WhatsApp me, no call facility available, but you can WhatsApp me on 850-766-4177. So guys, best wishes for exams. Good luck.